Hey everybody, welcome to Mortgage Today for July 12th, 2023, and oh, what a day it was. We've been waiting for this data for probably 2 weeks now. MBS were up a mighty 53 basis points real early this morning. Stocks were up 44 points. We got a 0.2 miss in the core CPI. It is one of the better eventualities bonds could have hoped for today. All that remains to be seen is now how big the rally is and if it will sustain. So far, it's been good for a nice solid drop. We got month-over-month headline CPI came in at 0.2 on a 0.3 forecast, which was 0.1 previously. We got the year-over-year headline CPA, which came in at 3 on a 3.1 forecast. It was 4.0 previously. However, keep in mind that a lot of this gain just came from the comparison number from a year ago, not necessarily that anything is any cheaper. We also got month-over-month core CPI. This is the big one that the Fed keeps an eye on. Came in at 0.2 on a 0.3 forecast. It was 0.1 previously. Year-over-year core CPI came in at 4.8 on a 5 forecast. It was 5.3 previously. So on paper, this all looks like a pretty big drop, but like I said, it doesn't really change a heck of a lot of stuff. Shelter was the biggest contributor to the index, accounting for 70% of the increase, while energy was the biggest drag. Shelter rose 7.8% year over year. Home prices peaked in June of 2022, so the year over year increases will go flat starting with next month's report. Used cars fell 0.5 after rising 4.4 for 2 consecutive months, which is good because my girlfriend needs to buy a new car. Should be more declines coming on that. Home or car insurance rose 1.3%. Food prices were flat at 0.1%, and airline fares dropped 8.1%. Not the ones I'm looking at. The report didn't have much of an impact on the July Fed futures, which still sees a 92% chance of another 25 basis point hike. All of Fed speak seems to indicate the central bank will hike rates next week. Reprice risk on the day was moderate. Anytime you see a big movement on like this, you can accidentally have to give it back because people just get a little too ahead of themselves. Today's CPI serves as an important role in pushing back the narrative of troubling persistent inflation. The 0.2 month-over-month level, after all, annualizes to 2.4%. If that level were to be maintained, the Fed would be in a position to declare victory on inflation and rule out additional price hikes. The market's takeaway seems to be that CPI takes one of the 2 additional rate hikes off of the table, but that wasn't enough to alter the course of the upcoming meeting. I don't necessarily agree with that. I think that it doesn't change that. I think they want this rate to get down around 2, and they want to see it stay there. I think it does not take the second one off, and I think also people are spiking the football on the 20-yard line because this is mostly because of the comparison effect. It doesn't mean life is any cheaper or prices are really, really going down. It's just a comparison where it's relative to a higher price time of period. So it's kind of like if we compared this to 1974, inflation would look pretty terrible. But as it is, at the end of the day, we'll take the gains we got. MBS closed up 75 basis points. Stocks gained 33 points at 99.61. That brings us up into this new trading range, which is our old trading range. So it's good to get back in the old trading range. And basically, we stopped right at that 25-day moving average. So we got a real convergence of technical factors right here that are impacting on things. While equities have so far enjoyed a banner 2023, firms that recently went public are struggling. The class of 2020 IPOs are down an average of 34% from their initial listing price. 2021 IPOs are down 46%. 2022 IPOs are off 49%. Relatively traditional IPOs, excluding SPACs, have so far raised $9 billion this year, well down from $87 billion in 2021, $24 billion in 2020, but up from 2022. So I think there's a lot of mortgage companies that are probably impacting that if I look at the charts right.